Thank you for viewing this Capital Magnet Fund Performance Report completion training. This segment will cover homeownership replacement units. We will start off logged into the Awards Management Information System, or AMIS. From the AMIS homepage, you will click on the CMF Performance Report tab. From there, you will click the link to the applicable performance report. If you do not see the report number showing up in this list, go ahead and hit the Go button, which will retrieve the full list of your organization's performance reports. For this performance report, in the last reporting year, House 1 was reported as placed into service with a $10,000 CMF investment. However, in this reporting year, we found out that the homeowner sold the property, and as such, we will need to report this project as terminated. In addition, we will also need to identify a replacement unit. As a reminder, in the event a qualifying homeowner sells before the end of the 10-year affordability period, and the new owner either does not meet the affordability qualifications or cannot be income qualified, then a replacement unit with a equivalent investment and in the same income category must be identified. As such, we will go ahead and first proceed by reporting that House 1 is incomplete terminated. To do so, we will report that in the annual report for this particular project. By clicking on the project link and then proceeding to the annual report, we can update the status of this project. You can proceed by clicking Create New Annual Report or cloning the last annual report. I will proceed by cloning the previous report and adjusting as necessary. We'll go ahead and start off by selecting a status of affordability and hit Create. Now that the annual report for this reporting year, 2020, has been created, we will hit Edit to make adjustments as necessary. For investment or affordability, we will go ahead and leave that as affordability. Project status at fiscal year end, this unit is incomplete terminated. For our project dates, you can see this project was committed to, dispersed, and completed all on June 1st of 2019. And we will report that as of June 1st of 2020, we need to report this unit as terminated. Recall now on the annual reports, you are reporting information throughout the entire life of the project. So we will leave this information in place regarding the disbursement amount. You can see here a $10,000 grant was originally dispersed into this project. When the unit was sold, that $10,000 happened to have been repaid. As such, we will report that $10,000 as program income here in the PI earned, equity, and loan repayments. For the eligible project costs, recipient level leverage, and private and public sources that were invested into this project, we will leave that information there as well and hit Save. You'll see at the top, we received confirmation that the annual report was successfully created. We can now return to the project record, and you will now see that project status is reported as incomplete terminated, and we have a green checkbox indicating that our annual report has been created for the current reporting year. Now that we have reported House 1 as terminated, we will return to the performance report and add in our replacement unit. To do so, we will go to the projects link and click New Project. From the drop-down, we will click Homeownership Housing. We're going to go ahead and create a project just as we would any other homeownership activity. Next, on the project creation page, we will proceed by entering all required information identified by those fields with the red bar. This unit we will name House 2. The project type will be purchase down payment assistance with primary financing type, permanent finance. Second position. House 1 was in the low income home buyer income category. So we will report that Home 2 is in the same income category. They also happen to be a first-time home buyer. As for other CDFI fund program funds, there were no other sources from the CDFI fund present in this project. Next, we'll hit the magnifying glass to look up the applicable housing program. We'll select the DPA fund, the housing program that was previously created for this performance report. Next, we'll go ahead and enter the sale price and 95% median sale price limit. This house will be sold for or purchased for $150,000 in an area in which the 95% median sale price limit is $200,000. Given that House 2 is replacing House 1, we will need to indicate as such. Here in the housing project replaced, we will click the magnifying glass, and this will pull up a list of projects. Here we can see our House 1, project status incomplete terminated. We will select that project record to indicate that House 2 is replacing House 1. For the use of CMF award, amount of committed CMF investment, since we received $10,000 in program income on House 1, we will invest that program income into this project rather than the CMF award. So we'll enter a 0 here. And then in the program income section, commitment of PI, that is where we will report that $10,000 we plan on investing into House 2. Next, we get into our projected eligible project costs. For the recipient level leverage, this will include the CMF award, any program income, or enterprise level capital. We project investing the $10,000 of program income into this project, so we will enter that into the projected eligible project cost recipient level leverage field. Moving along to our private and public sources of capital, we anticipate a $150,000 first mortgage from a local bank. We'll enter that into the third-party private, and then the $10,000 in CMF program income will also be entered into the third-party public field. Next, we will enter in a project address for this unit. Project's allocation, X coordinate, Y coordinate, and FIPS code. Please leave these fields blank. Typically, those are automatically generated by the system overnight. After hitting save, we receive confirmation that the project record has been successfully created. As such, we will now proceed by creating an annual report for this project. By the end of the reporting year, or the fiscal year, and the home buyers had moved in to the property, so we will report that this unit was in affordability at fiscal year end, where you might typically report that the unit was placed into service. Since this is a replacement unit, we will go ahead and select replaced unit at project status at fiscal year end. We will continue by entering project dates for this project record. You may recall the previous unit was terminated on June 1st of 2020. We were able to pretty quickly turn those funds around and reinvest them into this project as of July 1st of 2020. And since we have dispersed program income into this project rather than the CMF award itself, we will enter a 0 here in the total CMF disbursement amount. However, we will go ahead and fill in these fields related to the nature of the disbursement. This disbursement was a grant. It is fully dispersed. The eligible activity as approved for the recipient's assistance agreement is affordable housing, and the stage of investment, where you would typically select investment. Given this is a reinvestment project, we will select reinvestment. Since we did not report the $10,000 up here in the use of CMF award section, we will report it in the program income section. Here in the disbursement of program income, equity, loan, and recoveries. Our eligible project costs turned out to be the same as the projected values we entered on the project level. So we will enter the $10,000 CMF program income investment here in the eligible project costs recipient level leverage field, the $150,000 first mortgage from the local bank will be entered into third-party private dollars. And once again, the $10,000 CMF program income investment will be entered into the third-party public dollars. After hitting save, we receive confirmation at the top of the page that the annual report has been successfully saved. By returning to the project record, we can check on the affordability information for this project. Here you can see the 30-day gap between when House 1 was terminated and when House 2 was placed into service. That is noted here. Since this unit was placed into affordability on 7/1/2020, we would anticipate that the 10-year affordability period would end 7/1/2030. However, given the 1 year that the House 1 was in service for an affordability period, that time is taken into consideration, and as a result, the 10-year affordability period for House 2 will end 7/1/2029. Now that annual reports have been created for both of our project records, we are ready to generate the scorecard, which at times can take just a moment to load. And once that is loaded up, you will want to review for any failed performance indicators, providing an explanation as necessary. And when you are ready, you may submit the performance report. Should you run into any questions, the service request is the best method to communicate with the CDFI fund. Here on the toolbar, you will see a link to service request. From the service request homepage, click the Create Service Request button. For the program, select Capital Magnet Fund. Enter your requested by date. You can leave status as new, service request origin as web. Select the priority of high, medium, or low as you see fit. And then enter your subject and description. Additionally, we also ask that you please select the applicable award. You may look up the award by hitting the magnifying glass. In the event that you as a recipient have multiple awards, entering the award number will make it easier to answer and provide information related to your request. Additional resources that you should be aware of are that there is a comprehensive compliance reporting manual available on the CDFI Fund website. Additionally, you may reach out to the CDFI Fund by contacting us through one of the phone numbers or email addresses listed here.